Welcome to Accounting with Betsy, Financial Accounting Basics. In this lesson, we're going to be taking a look at T accounts.
This video will cover T accounts, debits and credits, and some tips and tricks to help you remember. A T account is an accounting device used to analyze transactions. It's called a T account because it's shaped like a T. A T account has three main parts: a title, the left side also known as the debit side, and the right side also known as the credit side.
A business will have multiple T accounts. Here are just some examples of T accounts you might find at any business. The effect of the debit side or the credit side will be different depending on the type of an account you're looking at. For assets, such as cash and accounts receivable, if you debit the account, it'll increase in value. If you credit the account, it will decrease. For liabilities and equity, the opposite is true. If you put an amount on the debit side, it will decrease. And if you put an amount on the credit side, it will increase. Let's look at an example. You're going to take some cash to the local store to buy some office supplies. In this example, the business received office supplies in exchange for cash. So those are going to be the two T counts we're going to use: office supplies and cash. Both of these accounts are assets. To make an asset go up, you put it on the debit side, and to make an asset go down, it goes on the credit side. Since we gained office supplies, we're going to put that amount on our debit side. Since we used cash, our cash will need to go down, so we're going to decrease that asset with a credit. Another great example is paying bills. A business will want to document all of their expenses in T accounts. In this example, a business is paying for the company's cell phones with cash. The first T account we will look at is telephone expense. To make the expense go up, we need to debit it. The other account we will look at is cash. Cash is an asset, and to decrease an asset, you need to credit it. So over time, as a business does different transactions, their T accounts are going to grow larger and larger. Let's look at a couple examples. The first one is cash. As you can see on the left side, our debit side, we have a $500 debit and a $600 debit. Now remember, cash is an asset, so when you debit it, you make it go up. So that means this company took in $1,100. However, there's a credit of $800, which makes that amount go down. So you'll take the $1,100, subtract the $800, which will give you $300. Accounts receivable is also an asset, so we're going to handle it just like we did the cash. On the left side, our debit side, we have three transactions: $200, $300, and $600. That's going to give us a positive balance of $1,100. But now we have to take into account our credit side, which is going to bring our total amount down. So here we also have three transactions: 50, 50, and 300. So that's going to give us a total of $400 that we're going to subtract from our $1,100. That's again going to give us a balance of $700. Now when we go to accounts payable, we're going to flip things around a little. Now if you remember, on the credit side, what brings it up, and the debit side is going to bring the amount down. So on our debit side, we only have $100. So that looks like we made a payment of $100 to what we owe. However, on the credit side, we have 500 and 500. So what we're going to do here is we're going to add our two 500s and we're going to get $1,000. But then we're going to have to subtract the $100 on the debit side, which is going to give us a balance of $900. You'll see here that the balance is written on the credit side to show that it is a credit balance. Now, rent expense is an expense, and to increase expenses, you will debit it. So we have 500 and 500, and that's going to give us a balance of 1,000. Since there's no information on the credit side, we can leave our balance as $1,000. It will be important to memorize the following information. You're going to use it when you do journal entries and some of your financial statements. So it's really important to memorize what effect a debit or credit has on a particular account. I know it can be very hard to remember if you're supposed to debit or credit the account. So I found some tricks to help you remember. The first trick is called dead click. This helps you to remember how to increase accounts. This acronym stands for debit, expenses, assets, and dividends, and you credit liabilities, income, and capital. So to increase an expense, asset, or dividend, you would debit it, and to increase a liability, income, or capital, you would credit it. Another acronym you may find helpful is GIRLS. This helps you remember what accounts are increased with a credit. The following accounts you'll credit to make go up: gains, income, revenues, liabilities, and stockholders' equity. That's how you get GIRLS. If you enjoyed my video, please subscribe. Also, if you have any other topics you'd like me to cover, please comment in the comment section. Thank you and have a great day.